Hey everybody, it is Wednesday, the 10th of July, and this market remains on fire here, up at a new all-time high. In particular, last half hour of the day, we saw a push that brought it to, again, new all-time highs here. And you can lament that the volume is light here, which it is, but only price pays. We simply have an absence of supply. The market is about supply and demand. If there's more demand for stocks, the market rotates higher to find the supply to satisfy the demand. It's not being satisfied. That is, the demand is not being satisfied. So instead, it has to go to higher prices to find it. And I think a lot of people who are trying to short this market are clearly on the wrong end of that. I had posted on Twitter this potential scenario for the market. This is the S&P 500, a weekly time frame. You can see it starts here in 2021, right over here on the left. This is 2022, and there's the low. So from the low we made in 2022 of 348.11, we rallied to 459.44. That was 111 points, or 32%. We saw a strong pullback and then rallied 115 points this time, or 28%. So just taking the average of those and saying from the most recent low of 493.86, if we were to rally 113 points, which is the average of these two in terms of points, that would put us up near 606. If we took 32 and 28% and said maybe this leg higher goes 30%, well, then that would imply we have the potential to go to 642. Here's the thing. That's just a level of interest on the upside. What our job is to do is to manage risk and raise our stop underneath the higher lows that we see appropriate. Case in point, I had pointed out about a week ago the similarities between this rally in the SMH and this rally. And this pullback here looked very similar, just as it did there. But you'll notice that what I said is over here, hey, the buyers are back in control. Maybe it's going to rally up a little bit and then fail, but it's not. So I'm not going to short this thing. I haven't shorted this. Instead, the semiconductors continue to make higher highs and higher lows above that rising 5-day moving average in the intermediate term, says it's innocent until proven guilty. And any such pullback is just not happening right now. By the way, as I also pointed on Twitter, this is not a double top, just as this wasn't a double top, just as this wasn't a double top, this wasn't a double top, etc. We only know a double top after the fact. What a double top is first we have point A right here, followed by a pullback to point B, rallies to point C, and then breaks the trend line, that's point D, and then it comes down, tests this low, breaks it. That's where you can call a double top. That's where you can say that was a double top. Until it does that, we're still in an uptrend. We're in a familiar area where the market was rejected before, but there's no evidence of that now. So why on earth would you want to sell short and throw your money away? NASDAQ also at a new all-time high, higher highs and higher lows. Russell 2000 showing a little bit of maybe relative, it's really not even relative strength here, but just a little bit of resilience, I guess, a little bit more neutral. I'm not as bearish on this, but I still think that it's probably a waste of time. And compared to the other markets, S&P 500 has had this enormous rally from April lows. Meanwhile, off the April lows, these have gone 5%, 10 points. They're just really not quite there yet still. Someone asked me why I'm so bullish on the biotechs, because they look similar to the Russell 2000. They do look similar, but they're different. They're different markets. Let's look at the weekly chart. This thing looks to me like it's on its way. I'm bullish the NASDAQ, not the NASDAQ. I am bullish the NASDAQ, but I am bullish the biotech action in here. I got long 2 days ago, and I've been outlining this as far as what I wanted to see happen. That happened. I got long over in here and am going to continue to hold this. I have a 2/3 position. I'm going to continue to hold it until the market tells me otherwise. The Russell 2000, I just don't see it there. We still have a 20-day below the 50-day moving average in the why do I keep doing that? In the biotechs, we've got a rising 20, above a rising 50, above a year-to-date anchor, above a rising 200-day moving average. This is a bullish market. It's just beginning, potentially, a much bigger uptrend that could see in the next 6 to 9 months a move up towards 120, 125. And you look at it in terms of what's your risk. Well, if you look at your daily chart, your absolute worst-case stop for a scenario for a longer-term holder, I think, goes underneath this higher low. So the risk reward is still good from a longer term perspective. Very short term, it's gotten a little bit extended. I wouldn't buy here. That's why I already bought 2 days ago. The financial stocks continue to just build some energy in here. They're still bullish overall. Don't forget, we have earnings season coming up. Energy names are starting to, again, stabilize at the 200-day moving average after getting rejected at that 50-day. There's no evidence the buyers are gaining control here, so I say just continue to leave them alone.